Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Something got me thinking, possibly due to the billions being burnt in our Tesla money furnace. I think I wanted to gain some perspective on all of this and see how little it matters that Tesla is losing a fortune right now. I thought instead we could focus on how much this factory actually will generate and what the return on asset will be. In order to do this, we'll need to estimate the cost of the building and then the marginal profits the factory produces. According to filings, Giga Austin cost $1.06 billion to build. Now this was just the initial building and excludes the extensions and excludes all machinery, which is also kind of expensive. Unfortunately, I have to guess how much all those robots cost in capex too. Well, perhaps not guess entirely, we'll go where we can find some clues. If we go into Tesla's cash flow statements, we can actually see how much they've been spending on capex. Since Tesla has broken ground in Texas in January 21, Tesla have spent $6.5 billion in capex. Of course, Tesla were also building Giga Berlin at this time, although production there had already been going for a little while. On top of that, Tesla are always spending capex everywhere. Shanghai expansions, new buildings for warehouses, new factories for megapacks, or even superchargers. When we go through the financials and look at some of the quieter months, there tends to be always around about $500 million in capex. We have 5 quarters equating to $6.5 billion total, which is an average of $1.3 billion a quarter. So if we remove that $500 million from the $1.3 billion, perhaps that might leave us about $800 million a quarter being spent on these new buildings and equipment. Over 5 quarters, that's $4 billion. Admittedly, some of Berlin had already started, but I think the majority of the costs would have come later, especially with the machinery. I am happy to therefore estimate that Giga Texas was around $2 billion to build, including equipment. And Berlin was probably in the same ballpark. However, a lot of the Texas building is also used as the headquarters, and we really want to work out the return on investment we're getting from the factories. The headquarters location is arbitrary in this scenario, as it wouldn't have made any difference if it was in Texas or Silicon Valley. However, we're trying to work out the full return on investment of the factories, which would also include Cybertruck. And aside from the insane Cybertruck Gigapress, I don't think a lot of the other manufacturing equipment has been purchased for Cybertruck production line. Therefore, we'd need to include that. However, we don't need things like paint shops, but who knows what else is required there. I think we should allow an additional $500 million though for that production line. Alright, I think we have a reasonable ballpark as to what Texas might cost, probably around $2.5 billion for building and equipment. We'll run that figure and we'll see if it can give us some idea of the return a new Tesla factory can generate. We are told the Model Y run rate will be 1 every 45 seconds, which with 25% downtime works out at about $525,000 a year, and perhaps $475,000 for the Cybertruck when they're both at capacity, perhaps within about a couple of years. I actually think I have a really good theory on Tesla's capacities, which I look forward to talking about soon too. Alright, so that gives us 1 million total deliveries. Like I said, we'll be at full alleged capacity, so perhaps this is 2 years away, implying that 4680 cells should be in high volume production and thus serving the vehicles with structural battery packs, thus effectively reducing costs and increasing margins noticeably. I've chosen an ASP for the Model Y of $64,000. I assume by this stage it would have improved along with the 4680 cells plus Tesla's price increases relative to value and demand. I've not adjusted for inflation. And as for the Cybertruck, I'm going to place $75,000. Remember, this is in 2 years' time, so there may be the lower cost dual motor available then too. Next, we need to come up with the margins. I've run models of how much margin Tesla could achieve with 4680 cells, front and rear castings, structural battery packs, and new production processes. 40% was an easy margin to achieve, and that was before we'd seen the price rises. That 40% excludes any regulatory credits or FSD even, and I don't even think any of you would disagree with me either. If anything, I can think of more reasons for it to be above 40% than below. I think the Cybertruck could even be closer to 50%, especially for the quad motor, but we'll wind that down to 40% as well, and see what numbers we generate from it. Anyway, we can make a nice simple table to illustrate all of this and break it down. It results in a total of $27 billion gross profit. This is obviously for an entire year, but to give you some comparison, Q1 generated $4.9 billion in gross profit in autos, which isn't far off $20 billion a year, i.e. the new Texas facility will generate more profit alone than the total of Tesla's operations in Q1 2022, if that helps gather any perspective. Now, this is gross profit. We do have OPEX to deal with too, but the additional OPEX to run Texas is going to be minute compared to the actual profits. I think it might be something like $100 million extra a year, but even if we make it $690 million, that still leaves $27 billion in operating profit, There was an interview back some time ago with Ron Barron, possibly over a year ago, and he mentioned that the Model 3 Shanghai factory had cost $1 billion and was returning $2 billion. I thought that was an exceptional return, but of course the Model 3 factory hasn't really improved overly in run rate since then. However, the Shanghai Model Y is running laps around the Model 3, not to mention the Model Y being a higher margin car. Well, that might imply that the Model Y is doing more like a 400% annual return rather than just 200%. These are such insane returns, especially when we think of just how much money is involved here. Well, we got to the numbers we were looking for Texas, so let's see what they come to. What we actually wanted here was the operating return on assets, which I think is going to be the best metric to illustrate how spectacular a return this factory is. Alright, we did it. We used some numbers that were a little rough, but the results are definitely showing us a good signal. We basically have eventual operating income of around 10 times the initial factory cost. Just from this factory, practically 10 times the factory costs every year coming in as profit, or even 2.5 times the factory cost every quarter. This is hard to believe, but these are the numbers. I don't think these numbers could have varied too far from the real numbers, perhaps at worst resulting in an 8 times return, but we aren't even close to finish yet. We have the cathode factory and a new phase 2 expansion planned already. Tesla are not messing around with this factory. They plan on expanding it relentlessly, with Elon claiming more than $10 billion to be spent on Texas. Assuming we've already had about $250 million spent, then we're only a quarter of the way. On top of that, we're using Tesla's claimed alleged capacities, of which a lot of the community secretly suspects that possibly these figures are somewhat sandbagged. I think that Model Y line should be closer to 1 million a year run rate within 2 years, and I know a lot of you would agree with me. I think what we have uncovered here is that these factories, despite sounding like they cost a lot of money, are actually extremely low cost relative to what they produce. In fact, we just discovered that they're practically paid off after a month of full capacity. But like Elon says, it will take longer to ramp them up than it did to build the factories in the first place. So it will take some time. By the way, Elon also said 10 gigafactories in 2030, and if each one increased operating profits by $27 billion, then that would be $250 billion extra profit just from auto sales. But we do have FSD too, of course. If it's feature complete by that stage, and maybe 1/3 of Texas cars adopt FSD, then that's additional $5,000 profit per vehicle, or $5 billion total for a year, taking the total to $32 billion, which is more like a 13 times return. This is why I invest in this company. There are so many easy ways to discover such vast profitability. I don't see any signs of profitability with any other EV company's financials, whereas it is literally bulging out of Tesla's. And that is why I would always invest in Tesla over any other EV company. If you think you're being clever having an EV portfolio with Tesla and NIO, etc., then ask yourself why. Why risk investing in the others that have a smaller potential return and a much higher risk of going bankrupt? Oh, don't forget, Tesla built 2 factories. Berlin should be doing similar returns too. Plus we have another one from China popping up soon, and we know they tend to get things going pretty fast over there. I mean, this is 4 new factory floors, all at capacity within 2 years, likely quadrupling existing gross profits, and not raising OPEX anything noticeably. So think what effect that might have on net profits, and then the stock price. Yes, exciting, but that wasn't the point of this video. The point really is that we have just calculated how much Tesla's product is worth. Remember, Tesla makes one main product, machines that build machines. And it looks like they can get a return of about 10x. This is mind-blowing. So Tesla just need to keep building more products. Tesla is the machine that builds the machine that builds the machine. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.